For that, we want to bring in Rebecca Romero Rainey. She is the president and CEO of the Independent Community Bankers of America. That's the organization that represents 50,000 institutions holding more than $5.8 trillion in assets and over $4.8 trillion in deposits. Rebecca, let's first talk about what the independent community banks are, because there's so much talk about the mid-tier banks, the community banks, who's been responsible for this. The banks that have really gotten in trouble the most so far have been those that have been the mid-tier banks that are somewhere, I guess, $100 billion to $250 billion in assets. The banks you represent are quite a bit smaller.
Yes, quite a bit smaller, and are completely different when you think about the business model that community banks represent. They are focused on local communities, taking in local deposits and deploying that out in loans in the form of capital to help grow local economies and be that source of sustainability for the future.
What do your banks look like right now? Are they under stress? Have they seen a flight of deposits leaving like we have with those mid-tier banks?
Our banks actually look really strong. What we've seen in this whole last few weeks is really, I think, as you noted earlier, an education about what makes banks different in this country, and not all banks are the same. And so with community banks, what we're finding is customers are going in and visiting the local bank presidents and talking about deposit insurance and building upon the trusted relationships that they've had in many cases for generations with that local community bank.
Do your bankers not need help at this point? Is there the thought that everything's fine?
So what we've been saying is, as we look at all that's happened in the last couple of weeks, is community banks don't need to pay for the special assessment or the cost to increase the deposit insurance fund to pay for the failure of SVB, and that really we need to let community banks do what they continue to do, which is support and provide 60% of all small business loans in this country, 80% of agricultural loans. Let's let them continue to be that strong source of stability and resiliency.
The argument has been that those banks are under pressure, which is why they maybe shouldn't be assessed. Is that the case or not? Are they under pressure, or you just feel like they shouldn't do it because they didn't get in trouble? Because the big banks could say the same thing at this point.
They shouldn't be assessed because they're strong and stable and they don't have the risk management practices that we've seen in some of these larger institutions. Community banks are making decisions and taking risks that take them over the long term so that they have the stability and resiliency in times like this.
Yeah, Rebecca, I was just going to say the mega banks, the really big banks, could probably say the same thing. Back in the financial crisis, they were the bad actors. They were the ones that got in trouble. Some of them would probably say the same thing. We shouldn't be assessed for this. We didn't do it.
Well, I would say quite the contrary. I would say that as we see size and scale within this industry, as we think about risk and as we think about the opportunity to not incur additional fees for the smallest community banks, that's what we really need to focus on.
Right. Okay. So in other words, as long as you guys aren't assessed for this, you feel like you guys are in good shape?
Yes, community banks, look back at the last quarterly community bank profile report. Asset quality is favorable, deposits are stable, capital is strong. They're really very positive picture as you look at community banks.
One of the stories we've been following in the Journal and other places is that commercial real estate is so heavily reliant on community banks that something like 80% of them, of those loans, are made at community banks. Is commercial real estate potentially a problem?
I think, as we work through this current economic cycle, what I would go back to is the business model and decisions that are made on community banks. They're made not to take the immediate or short bet. They're made to be sustainable and reliable over the long term. And so as we look around the corner in terms of what the next challenge will be, I would argue that community banks stand ready to work right through that, just as they have historically in the past.